If here from readthemarket.com. Thanks for coming along to this webinar. It's not going to be a very long webinar, just kind of quick and simple. There's not a lot to say in it, but it's well worth watching anyway. It was well worth me knowing how it works. So okay, price action masterclass, the simple way to know where price will bounce. That's what it's about, and we'll get into seeing how to know where it will bounce. Now, the market is not random, not in the tiniest bit random. Everything happens for a reason. Everything happens in the right place, pretty much always. Now, that's not to say that on every trade we take, we can go in 100% on risk, because there are always anomalies and everything doesn't work perfectly. So we use good money management to make sure that we're always on the right side of the market. But what I have become well known for is picking tops and bottoms on price. Like this here, there's a sell and price didn't go up for an instant further. That's what I like to do. I do it quite a bit, really. There's more of it, and there's a bit more of it, an entry up there and then another entry over here. You know, it becomes really simple to do this stuff simply with a little bit of understanding of the market. Now, the market, as I say, nothing is random in it, and it's run by these institutional traders who manipulate the entirety of the market with their methods, and they're a little bit lazy in their methods. They've always got pretty much the same targets for everything that they do, and they always go to the same places. So what I simply did was find out where it is that they bring price to. Now, what kind of a trader am I? People often get the impression that I'm a supply and demand trader, but I'm absolutely not a supply and demand trader. I'm a simple stop loss trader. I trade where everybody else's stop losses are. I find that it's the best way to go about it. Now, oh yes, there's my co-presenter. Any webinar I ever do, my dog gives out. He wants to stay near me. He won't go outside. So yes, you're going to hear a little bit from Pip. But yeah, you'll get used to that over time. Now, do I trade with indicators? Absolutely not. They're the bane of the industry, and nobody should ever use indicators. What I simply use is a line and mostly a rectangle. Just a rectangle is all I use for marking price. And that's it. So yes, we can easily take, I mean, look, here is the theoretical stop loss on this particular trade, and that's that. So I suppose there's maybe 20 or 40 times the return on this relative to risk. You know, really simple stuff, and that's what I really like to get. So there's more of it, a GU sell there, and no stress whatsoever. You just take the trade and get in and make your profit. So, okay, why did I learn to trade the way I do? There are 4 big reasons for it, and they're all pretty similar to each other. Yeah, I hate drawdown. For a start, I hate being wrong, but worst of all is I hate not knowing what's happening to price. So I like to take the tops and I like to take the bottoms, and then not have to worry about price going against me and wonder what's happening with price, because you can lose subjectivity once you get into it, or lose objectivity once you get into a trade. So I like to get into a trade at all the stop losses, so that there is no second guessing. It's just, you know, the price isn't going to go up any further, or price isn't going to go down any further. You just get in, and then there's no drawdown to your trades, and you can get really high returns on your investment. So okay, I hate drawdown. I hate drawdown. Yeah, I think you get the picture there. So onwards. So now, in order to find where to trade from, we need to look for tricks being played into places where tricks were played in the past. Simple as that. Now, always remember that when you're looking for a trade, think about that statement. We're looking for tricks being played into places where tricks were played in the past. So we'll go into the past and look at tricks having been played there. So, all right, let's have a look at this over here. I hope you can see my cursor. Now, here's a place to trade over here. Now, why is it a place to trade over here? Now, this one's a bit odd, but it's simply the way I look at it. You'll see over here, there's 2 candles. There's a high there and a high there, and a high pretty close over there with a pin bar on it. Now, I don't read candles, I don't read pin bars, all that sort of stuff. That's pure rubbish, and avoid it at all costs. But what do we have? We have a high there and a high there, and pretty much we have another high there. So what were the retail traders doing when price got there? Well, it made a high and then made another high. So then when price got back to the highs again, the retailers are taught just by the propaganda of different trading sites, different websites and whatever, different educational material, that this is a range, and in a range what you do is you sell the top of it and you buy the bottom of it, and you put your stop losses just beyond the range. It sounds really simple and it's just pure rubbish. What you never do is have your stop loss just beyond the range, because what do they love to do? They love to create a resistance for price and then another resistance for price, and then more traders will get in here and they will sell here again because it's a range, and they'll have their stop losses above those highs there. So what do the institutional traders do? Well, they just push price up to get the stop losses from the people who use the common wisdom of trading the top of a range, selling the top of a range with their stop loss just above it. So tons of stop losses just above that range, ready for the institutional traders to use those stop losses. Now, let's just be clear about what stop losses are. What we expected retailers to do over here was to sell and to sell and to sell. Now, that's it. They're selling at a good place. Now, they've got their stop losses above the range, and what is the stop loss on a sell? It's a buy. So, if the institutional traders want to sell, they need loads of people to buy to them. So they'll set up a range like this, and everybody knows, and they especially know, because they're the ones that put most of the propaganda out there, that you put your stop loss above the range. So there, stop loss is over here. So right at a high price above the range, the retailers are buying. Now, they don't really understand that what they're doing in stop lossing a sell is to buy, but they're doing the worst thing in the world. They're buying high. Now, we never like to buy high, we like to buy low. So there's tons of buy orders there, and then you've got breakout traders as well. You've got breakout traders who say that, all right, this range has been broken out of, so we're going to buy the break of this. So yes, loads of buy orders there for the ITs to sell. And what do? They shoot price down. They've eaten up all of the buy orders that are there and used them to sell really heavy down to fill the range and go even further into a larger range. So that's the past. What you had is a trick having been played in the past. You had loads of sellers getting in to have their stop losses easily taken by the institutional traders. So then over here in the future, what have you got? You're back up to this level again, and there's a ton of sell orders in there, and it's ready to go. Now what have you got? You've got another candle over here and another candle over here. You have a high over here. So they've made a high, then they've made a higher high over here, and then they've made a higher high again. So it looks like it is an uptrend. And especially now that you've broken this over here, these candles, it really does look like an uptrend. So it's time for everybody to buy. But they're buying into this level where a trick had been played in the past and price comes back down. Simple as that. So it's tricks being played on approach to where tricks were played in the past. So, okay, on we go. Now here's some more. If I am looking at price, looking at a bear chart, this is kind of what I will look for. What have we got here? Okay, here is where we had a high and another high lined up, and what did they do? They took the stop losses and the breakout traders up there, and then they pulled price back down. So when price gets back over to this level again, it's going to bounce from it. And it does bounce beautifully from it. And where does it bounce to? Well, it comes back all the way through this range here, and you see this, there's a low there which got broken by this. It's a trick having been played, and it came down to there and it bounced again. Really simple. Now, if you can find other places where tricks were played in the past as well along the way, then you can get bounces from those as well. I mean, this is a daily chart, so in here you can easily find lower time frame places to trade from, just to trade the bounces on where the tricks were played. So over here is another place where a trick was played. You've got this here. This is a false resistance, and what they got was sellers involved there, but they took the stop losses from the sellers. So when price gets back over to here, you know that it's going to bounce. But look, it's already done its thing over there. It's come over to there and taken those orders, so that makes it weaker over here. The best one is a fresh one that hasn't been touched yet. Now here's another one. Here is a high and then a higher high, so everybody thinks it's an uptrend, of course, and it comes back down. So over here, when price gets back, it's due to bounce there again. So just watch the future and watch this line here and there. You'll see that inside here it is going to bounce, and it's probably going to bounce down as far as this box here. But we have to wait and see the approaching price and see what's going on with that. There's another one over there. This one was an high and higher high, and then price comes down. So next time price gets into here, you can imagine it's going to bounce. It really is as simple as that. So without any indicators, without anything on the chart, you can know where price is going to bounce, and you can use that. Now, you've got to manage your There's a dog again presenting. Right, you've got to manage your expectations on these trades. You can't expect every single bounce to be a reversal, because it doesn't work like that. But you will find that there are orders in these places ready to be taken and ready to be bounced, and that's what we do. Now, okay. So let's have a look at the trick in the past. Well, here is some pretty straightforward price action here. What have we got? We've got price coming up, and then it makes a high, and then it makes a low, and then another high, a lower high, of course, and then a lower low. So what's that? That is a trend direction. Or a trend direction change, or a trend change. I hate the word trend. I never trade trend ever, ever, ever. It means absolutely nothing to me, but it is part of the nomenclature of trading, so in this respect I will use it. So okay, we have a trend change down here. So what do we get? We're going to get the retailers seeing that this is a trend change, so they're going to sell here at the RS, of course, and then your clever supply and demand traders are going to sell at this supply. Great for them. So the ITs will gladly let price come down and make it look like supply is working, and then they're going to put them under pressure, and they're going to break this supply, and they're going to come up to the next supply over here, and then they're going to make it look like that is working. So yes, next time price comes back up to here, you might even get even more supply sellers coming in, simply because the ITs want to have people trading in the right direction in and around the best price, so that they can take their stop losses later on. So you will have had RS traders in here, and when price, or as soon as price got back to here, they will have started selling. More sellers there, more sellers here, more sellers over there. So they've got tons of people selling in there, and everybody knows that with supply and demand trading, you've got to put your stop loss beyond the high or beyond the low. So that's what they're going to do. The ITs know that there's a ton of stop losses up here, and that there will be a ton of breakout traders as well. So everybody who is selling down here has big buy orders there for the exact size of the sell orders that they had here. And then there's other buy orders from breakout traders above. So that's it. Tons of buy orders there, exactly what the institutional traders want. So what do? They take all the buys, which are real buys, market orders, or the stop losses, tons of buys, and they sell through. So when price gets back up over to here, this level over here, where the trick was played in the past, is very, very strong for price to bounce on return. Really strong, and it happens all the time, where at this level you will get a bounce back. So now here's a quote from one of my favorite people who ever lived, Red Sword 11. He was an absolutely amazing trader, and we learned so much together. He said, I'm paraphrasing this, of course, I don't remember exactly what he said, but he said, the market moves in such a way that it will always cause the maximum possible pain. Now, any of us who are traders know either we remember the days of being grey-faced with price going against us so badly, and we remember the times when we stop our trades, we take a loss on a trade, and then price turns exactly at that instant, whereas if we had stayed in, we would be big winners. But what they're doing is causing maximum pain to us, so much pain that we can't hold our trades any longer. So with him saying that, it was natural for me to have a look for the maximum pain level. So what have we got? Let's go back to this again. Here we have our trick in the past, where all the stop losses were taken and all of the breakout traders were destroyed, and it is a great place to look for PA on return. Now, we can very often touch trade these places. Now, Have I told you everything about this scenario? No, there's a little bit more you're going to have to learn about this scenario, but this is a really good starter for it anyway. If you go to our website, you'll see the rest on what to do in places like this. So let's look at the approach. Okay, on approach, what we do is we get close to the maximum pain level over here, and we do exactly what we do over there, or exactly what we did over there. We make a high and a low and a lower high and a lower low, and then what do we have? We have our, yes, we'll have our SR traders selling here and our supply traders selling there because the trend has changed. It's now a downtrend as far as they're concerned. So maybe some of them will have their stop losses there, maybe they won't. The more clever ones will have their stop losses up above here, of course. So yes, you do have sellers getting involved there, and sellers getting involved there, and sellers getting involved there. Now, the sellers that were in here are in pain by the time it gets to here, but they're still hoping that this is going to hold it down, and it doesn't hold it down. It actually breaks this. So that does put them under pressure. Now they're hoping that this supply over here is going to work, and they'll even add to their positions here as well, simply to be able to make use of the trade that they're in. It is a trend change after all, so they are going to sell here. But their stop losses are above here, and of course there are breakout traders above here as well. So there's pain caused on the break of this. There's pain caused on the break of this SR as well. So there's pain there, and then over here, this is the last hope for price. Anybody who thinks they understand price action or supply and demand or whatever, they will call this the last possible hope for price. And as soon as price gets up above here, they'll imagine the price is going to shoot off into the sky and never come back again. So they're going to stop their trades. And what the institutional traders will so often do, they will let price shoot up really high there and take up in small doses all of the stop losses and all of the breakout trades that are in there. And what will they do? They will then bring price down through. Really simple as that. So it is them causing the maximum pain to the retail traders. So if you see a level like this over on the left where a trick was played and price shot through and high or low and then shot back in the other direction, and then you see something like this over here, a trend reversal before it gets to this point, watch out for tons of stop losses. I mean, it's totally natural and normal when you look at it in a psychological fashion and look at the way you've been taught to trade in the past by other people, you will see that the stop losses are always up here. So it's totally natural to take those stop losses over to here into this level and then shoot price back down through. Really simple as that. So, all right, now here is another one. What we've got is a left shoulder over there, and then we have price coming back up to it, and there was a really simple trade to be had on there. I did take that, and that was something like 40 times reward to risk, something like that, and very, very simple trade. And these things happen all the time. Now, this is a H4 chart. This could have been a monthly chart, and that level would have still worked. Now, they don't always all work, but there are ways of working out which ones are working or which ones will work in the future. And then once price actually hits these levels, we find it safest to use price action when price gets to there. Read what is happening on approach, and then read what happened once price got there to get in for a simple trade. It does take a lot of experience to be able to touch trade these things like I did there, knowing that you're going to get a good range fill. It takes a ton of experience, but once you have the experience, and you're not learning all the wrong stuff, you're actually learning the right stuff, you can do this quite easily. But there are other ways as well. I mean, I gave this call to the to some of the Academy members on the subscription, the monthly subscription thing here, and it was actually a trade with price action. We could tell beforehand that price had made PA for going down, so this was a really safe sell on here. So yeah, really simple sell. And is there more to that? No, that's pretty simple. Okay. So will we always get a reversal? No, we won't always get a reversal. Absolutely not. We will so often get a bounce from these levels though, and we can manage our expectations on the trades from these bounces. So onwards. So back to this one again. Let's just have a look at it. All right, here we had another high, and it looks like the same thing again. It looks like we have a high, and then the high gets broken up, and it seems to me that nothing happened there. Now, what happens over here? Okay, have a look at this one as well. Here's a low, and another low, and another low. They're all lined up nicely together there. And of course, this is a range, so everybody who thinks they know anything about the market is buying the bottom of this range. And then the bottom of the range gets broken out, and then price comes shooting back through again. So that is an absolutely beautiful place to look for a trick in the present or in the future, you know? Because it's a wonderful trick in the past. It is a range all set up, and it's broken right down like this. So then price gets back down here, and does it reverse? No, it bounces. So we get price coming down to our left shoulder here, and it simply bounces back up to this low over here. So you've got to manage your expectations on these trades. Now this is an H4 trade, and you could have taken that trade with price action confirmation and gotten yourself in there for a nice little profit. Always possible. Then here's another one over here, and price actually bounced off that one in the end. Now it came back up over to here, and you'd expect for there to be some reaction once it got over to here, because here's a left shoulder, and here's where it got broken up and all the stops got taken, and then price came back down through. And yeah, with all the stop losses getting taken, you can see they got taken because I sold it up there. Because I'm a stop loss trader. So you'd really expect for price to bounce once it got back down to here, and it looks like it didn't. Now click on here, but I've left the rectangle there from the H4 chart, and I've opened up the M30 chart here, and we'll see what actually happened once price got up to that left shoulder level. Well, it came up to it, and it bounced right down to the last set of highs. Now, this is where I say we've got to manage our expectations on our trades. Very often we can fill absolutely gigantic ranges from places like this. Other times it's just the bounce back to the last piece of price action that we had on approach. And this one's just simple. So if we had have taken a touch trade there, let's say, our stop loss would have been up beyond here, and our take profit or our first profit would have been over here. So you're actually still getting at least even money on this. So what I like to do with trades like this, or most trades, is take enough off at the first target, take enough of the position off at the first target, that if the stop loss gets hit, that there is no loss. So really I don't lose trades. Because I'll always take enough at the first target to make sure that if the stop loss gets hit, it doesn't cost me any money. So simple as that. Really, really easy stuff. We're most of the way through this webinar already, and it's just so simple. Now, okay, here's the same chart again. So, okay. This is another important question. It's why did this one not work? We have the left shoulder over there, and we have the left shoulder over there. So that is a range where everybody should have been selling the top of, and instead price broke it and then came down through. So why did this one not work? Well, let's see. Go into a lower time frame. There's your left shoulder, there's your other left shoulder, and here is where you would have expected the bounce to happen. But what have we got? We have this over here. On the way away down here, price actually came and picked up these orders. So that means that that level wasn't clean anymore. There just weren't orders there to be picked up for price to bounce back down. So we have to look at these left shoulder levels and see, have the orders actually been picked. Here they were picked, so this is the second time back to try and pick those orders, and price just went through. Obviously enough, because the sell orders were no longer there because they got used by this. So we've just got to make sure that we have clean orders in these places. Now, clean orders, they're really, really simple to find. I mean, seriously simple to find. There's this thing called supply and demand, and people do use it, and in a way it does work. What we've got is a base here. You see there's a kind of a flag formed up here, and there's a rally on the way up to it, and then there's a base here, and then there's a drop. So we do look for rallies, bases, and drops in one formation to find where orders are. And it really is as simple as that for finding out where to look for orders. If they line up with the left shoulder like this and like this, then it's great. You've got a rally base drop over here and left shoulders there, and when price gets back to them, it's going to bounce. But here it came back to the rally base drop and bounced already, so we can't expect it the next time. So I'll let that digest just for one moment while I get a little drink of coffee. Here we go. Okay, so what's next? Now, is this all we need to know about the market? Again, absolutely not. It is not all we need to know about the market. There's loads more we need to know, but this is a really good start. So, can what we learned today be improved upon for deadly accurate entries? Well, absolutely it can. Yeah, that makes sense there. So, my golly, this is only a half-an-hour webinar. Excellent, excellent. I gave out so much really good stuff there in a really short time. This is going to be a quick and easy video to watch and watch again. So yes, I'm really delighted that it's so fast. I did speak really quickly here, however, but still, there was a lot to be taught in it and a lot was learned in it. So next week I'm going to have another webinar, and it's going to be about the same length, probably. Maybe a little bit longer, because there is real price action in it. And once you tie it together with what we have learned in this webinar, you're going to find something extremely powerful. I mean, really, really powerful. It is a great way of being absolutely certain that you're going to make money from the market. Now, what have I written here? Okay, the next one is the Quasimodo, and it is very simple, real price action. Now, real price action is the thing. Lots of people say that they're price action traders, and they trade pin bars and bearish engulfing outside bars and dojis and morning stars and evening stars and rubbish, rubbish, rubbish. It's totally unnecessary. The price action that most people think they know is rubbish. It's just nonsense. There's real price action out there, which is about engulfing. It is about getting into new zones and filling up those zones. Remember, I said to you that I don't go in for the word trend, and there's a very specific reason why I don't go in for the word trend. Trend is really vague and it means absolutely nothing to me. With the way I trade, I see that price has broken into a new zone, and that means that it's going to get to the other side of the zone. It's not a trend reversal, it is just price showing you that it's going to get to a certain place and then it going to that certain place. And you can be very specific about where price is going to as well. And that's partly to do with the Quasimodo, the next lesson, and it's very much to do with the lesson that I have just given here. Yes, it's a very short lesson. I won't apologize for it being so short, because you are going to be putting hundreds of hours into your charts. Well, that's if if you've got a general interest in trading, and you've got an interest in trading without, if you've got an interest in trading without indicators and with just pure price action, you are going to be looking at your charts and applying those rectangles that I've applied there. You're going to be putting them all over the place and just seeing how fantastic they are at working. So I think I've run out of slides for you, so I'm going to take some questions if anybody has them. So please take a couple of minutes to think about questions that you might have, and I'm here for them. And of course, between now and the next webinar, I do ask you to dump every indicator that you own, because indicators are rubbish. They are absolute rubbish, and you will never ever need them. It's just a line and a question. I'll open the question box and see some. Okay. Aha! Sorry, I'm not used to. Oh, we got loads of questions here. Excellent. Good, good, good. Because I had expected some. Now I want to make this questions box bigger. Boo, 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 because I can hardly see it. Forgive me, this is the first time I've used this. And the questions box is really small for me. Boo, boo, boo. Please be bigger. Okay. Oh, I can make this open. Okay, right. I mentioned price action confirmation. What does that look like? Well, that is a really good question, and yeah, let me give you oh, I know the name of that. Hello. I know who asked that. You know exactly very well what price action confirmation looks like because you've been with us for a very long time already. So you know this stuff. But price action confirmation, when we do the Quasimodo next week, I will tell you all about price action confirmation. And then the week after that, we're going into compression as well. And that is going to help you an awful lot with price action confirmation. So come back to me next week for price action confirmation and you'll get all about it. Will there be a recording of this available? Absolutely, there will be a recording available. It'll be in investing.com and we'll have a link to it in RTM too. Will the webinar include diamonds? Do you want the next webinar to include diamonds? Oh, Aaron. Yes, it will. We'll put diamonds in there as well. Why not? It's a nice day for it. Where will I get these charts? Can I get them on Read the Market? These charts per se, well, they're just MT4 charts and all they've got is a few rectangles on them, which you should really get used to drawing for yourself. So I'm not sure exactly I understand that question. Yes, go to Read the Market anyway. I'm never going to say don't go to Read the Market. It is the best place in the world to find the right information on how to read the market. Where can we see the webinar replay? I've answered that one already. When you say look for tricks in the past, how far in the past are we supposed to look? Oh my golly, you can look as far as you like. You can look back to 1971 and see a left shoulder over there and you will be able to trade that left shoulder. It really doesn't matter how long ago it was. It could have been a million years ago. As long as the institutional traders have the history on the chart, they are going to use these levels all the time for bouncing price. Now, the one time that they're going to stop using these levels for bouncing price is when there are enough of us retailers who know about it actually waiting for those levels to occur, and we will take those trades with the institutional traders. Now you might think that that is a good and a wonderful thing to be able to trade with the institutional traders, and it is a wonderful and beautiful thing to be able to trade with them. But once enough of us are actually trading with them, they won't have all the stop losses and the breakout traders that they used to have, so they're going to need to move their targets again, and then I'll have to come and make more webinars in the future about where their new targets are for price. So yes, while it's great for a good handful of people to know where exactly it is the price bounces, it's not good for everybody to know where price bounces because the institutional traders then will not be able to fill their order books and they're going to have to change the way that they work. So that is one problem that we have with too many people knowing about this stuff. But you know, it's not a problem yet. I don't put 100 million lots into every trade that I take, and neither does anybody that I know. So you know, we're still kind of under the radar. Where can I ask questions to the host? Well, if you go to readthemarket.com, you can go to my journal. It's If My Auntie's Journal, and really every question that you could possibly ask me has been asked there already, and it has been answered. So, yeah, Read the Market. It's kind of a big site. It's been around for a few years at this stage. There's loads of people's journals in there where they have documented all that they've learned throughout their learning journey, and there's really some great stuff in there. I like my journal because it's got my mind in it and it's got the way that I work in there. There's the classroom section in there as well, and people do help out. Now, I have said pretty much in there pretty much everything that needs to be said, and I don't repeat myself too often, but go through the site and you will find everything that you need to know about the markets and none of what you actually don't need to know about the markets. RTM is kind of like a puzzle. It's all the pieces of a puzzle there. No pieces that don't fit. Everything does fit, and you're going to have to fit it together for yourself. Yes, we do have paid courses where we put the pieces together for you. Some of them are, I mean, the Academy itself, it's really involved, and it really is like a PhD kind of thing. It's very, very involved, but it's there for anybody who wants extra education. But all the pieces of the puzzle are there for free in RTM, so it's a place to trawl through. There's an education section there which will get you started. You can write your own journals and get help from other people who are on the same journey as you. So okay, when you say look for tricks in the past, oh yeah, I've got that one. When will it begin? Oh, okay, well, yes, right. What's the difference between those levels and simple support and resistance? Is there a big difference between... all right, support and resistance, it's absolutely fantastic, but we cannot take it to the pip. There are ways of trading support and resistance which are absolutely fantastic, and they look absolutely nothing like support and resistance. It's all about the lesson that I just gave there, really. You'll learn to find these kinks in price, where price will bounce, and where support and resistance are. It's not always to the pip. I mean, you can have a low, price won't always bounce at that low. Sometimes it'll bounce below the low, or sometimes it'll bounce above the low. It's still support and resistance, and if you've taken anything out of this class, later on when you look at support and resistance, you will actually see that price does not have to bounce at exactly the high or the low for it to be an SR bounce. We can move around a little bit and still find the perfect entry on support resistance, even though it's not exactly at the support resistance. Yes, it sounds a little bit vague there, but once you see the sense of it, it becomes really beautiful. Okay, what time frame did you find is the best to identify these MPLs? It really doesn't matter what time frame it is. I used to, when I had just learned how to trade, I was trading the 1 minute chart, and I was just buying and selling and buying and selling and taking 30, 40 trades a day from these levels, and every single one of them was working and working absolutely beautiful. But you know, you'll find that you tend to burn out by taking 30 or 40 trades a day, so I stopped doing that, and now I pretty much trade whenever I'm nearly broke, and that works for me. You know, I'd rather live on holiday than be rich. But you can trade these on the M1, you can trade them absolutely any time frame you like, and you can trade them on any pair you like as well. It doesn't have to be FX, it can be agri, it can be precious metals, it can be stocks, bonds, anything at all. They all work in the same way. Okay, what's my take on binary options trading? Oh, a good friend tried to explain that to me recently, the binary options and the drawing nice curves and the likes of that. It is one thing that I will get into, but it seems to be completely unlike the trading spot that we do. So I do look forward to learning it, but I have no opinion on it just yet because it's a different skill to learn. But I do love puzzles, so that's going to be my my next little trick. What's my real name? Oh geez, I've been If for, what is it, 6 years now or something, so my real name now is If. What's the best time to analyze? Is there more to that question? I don't know how to expand it. What's the best time to analyze? I think after your second coffee in the morning is probably the best time to analyze, but if you're asking what's the best time frame to analyze, work it out for yourself. Are you going to be staring at your screen all day, or is it something that you're going to come to in the evenings after work and just look for trades? If it's something casual, then look for the H4 and the daily and higher time frames. You'll find yourself loads of trades. You'll find yourself enough trades to keep you going. And with trading at the MPLs, you're going to find that you're getting massive return on investment with these trades anyway, so you do not have to take 30, 40 trades every day. You can take one every month or whatever, make 80% of your account, and you know, how many times do you need to make 80% on your account before you can compound into a decent living for yourself? It doesn't take too long. Okay, what about flag limits? What is the difference between flag limits and kinks? Okay, well, we haven't covered flag limits in this webinar, so that is something which I think may be best covered in RTM, because I might be confusing people here. But there is, just between you and me, there's no difference between flag limits and kinks. Okay. Well, I see an article written by you called "The Financial Markets Are a Scam." Do you mean that we should forget gaining profit from trading? If you want to make profits from trading, then make profits from trading. It's very simple to do. Yes, it takes a lot of time to understand it all perfectly and to make it instinctive. But yeah, I do have a problem with making money from other people's misery. I don't like doing it. And yes, every time I win a trade, some poor schmuck has lost a trade. And it's not a big banker who's lost a trade. It's not the institutional trader. I simply just took a few trades off them that they were going to take anyway. And I'm living off the misery of others. So yes, winning in the market means you're taking advantage of losers. And that's the way it is. The losers are always going to give their money to somebody, whether they give it to the institutional traders or whether they give it to me. Yeah, I suppose I'd rather it were me that they gave it to. But yes, the financial markets, they are a scam. Absolutely, 100% they are a scam. I mean, where else can you sell something that you don't own? I mean, I can go into the market here. I can create, okay, if I was the Federal Reserve, if I was a Rothschild or something, or I owned the ECB, I could make an absolute fortune, just create money out of absolutely nothing, and then short something that I don't even own so that the value of it goes down immensely. And then once the value of it has gone down, I can actually buy the real thing at a knockdown price, and there you go. I've created money to bring down the value of something so that I can create more money and buy it for free and put the people who are in the business already out of business. It is a scam. There's the education about the market. That's a scam too. That is propaganda. It is so many lies. I mean, put your stop loss above the high. I mean, when price crosses the 50 EMA, when price does this with Bollinger Bands, it's rubbish. Forget about all that. It is, the whole thing is a scam. There is very little truth to be found about the market there, except what my friend Red said, in that it will always cause the maximum pain. So yes, and if you want to make money from trading, do make money from trading. Just know that you're trading or you're profiting from other people's misery. What else have you got? Really loads of questions and great to see them. Thank you. You say enter your trades in stop loss zone. Then where exactly do you put your own stop loss and how do you calculate your stop loss? That's another wonderful question and a big question. Where I tend to trade, it doesn't, okay, it sounds big-headed and it sounds, really it does sound arrogant to say that my stop losses don't get hit. But they don't get hit. Really, they don't. Every once in a while they do, and that's why I'm only going to go in for 2% or 5% of my account on a trade. But yes, they do not get hit for the most part. I know where price is going to bounce, and I do the clever thing of taking off enough at the first hurdle, so that if the stop loss does get hit, I do not lose. So yes, yeah, in the academy, I do show where to put stop losses, all right, that is true, but they don't tend to get hit because price goes exactly where we want it to go. Okay, they must get hit on some unfavorable news item and big gap. It's a long time since price has actually gapped over me at the weekend. I did trade some stock at one time, and yes, I came back and price was on the other side of it, but 10 minutes later it came and hit my stop loss from the other side, which was actually a break even, so I broke even on that trade, just waiting for price to come back. If I hadn't had my stop loss there, then I would have been in massive profit from it. Trading on unfavorable news, no, news is absolutely brilliant. When you get these levels sorted out and you get used to trading these levels, you will see price shoot really hard into them and really fast into them. Now everybody says, it's part of the old propaganda, they say that you should not be shooting bullets and you shouldn't be catching falling daggers and stuff like that. Rubbish. Catch those bullets, catch those daggers, let price come really hard and really fast into your level and watch it bounce. Now, every time the news happens is not when to do that, but the news will very often give one initial push in the wrong direction, and when it gives a push to one of these levels initially, you can trade it and then watch it shoot off in the other direction, and you and you win. But yes, this isn't a webinar about news trading. It is a big thing, and you really do have to be a master at this before you start trading the news. So if you have pending orders set up on any of these levels prior to the news, get off those pending orders. You'll have to actually watch price approach them. But yes, the way we teach in RTM is always take price action confirmation trades on these places anyway, not touch trading. Okay, the problem with this approach is there is always news that gaps the currency or whatever. Well, we have the ability to know when the news is coming, so that kind of keeps us on the right side. Okay, the more strategy being used is less to be reliable in the future, especially, exactly, that's what I'm saying, especially if the IT is watching this and knowing that their tricks are discovered. What do you say about this? Yes, I say that the more of us that know about this, the less useful it will be. Absolutely. That's why I don't give every single piece of information that's necessary to really understand this fully. I don't just give it out on the free. Yes, actually, that's a damn lie. I do give it out freely, but it's all in a mess, and you'll have to look here and you'll have to look there, and you'll have to spend hundreds of thousands of hours looking through the entire site to find all of the pieces that I've put in there that say, yes, everything about the market, absolutely everything about the market. And once you've spent maybe 1,000 hours studying RTM, there's one particular article that you'll go back to afterwards, and some of you know this already. There's that one particular article, it's about half a page long, and it explains absolutely everything perfectly. So you will kick yourself after 1,000 hours learning this stuff, going back to that article and saying, yeah, he actually said that on day one. There it is. There's exactly how the market works. But yes, it takes a bit to understand how it works. So, okay, on to more questions here. The Fed wants everybody's money. Absolutely, it wants everybody's money. Oh my golly. Printing out money every time anybody makes a loan and then not printing out the money for the what's it called, the interest to be paid on it. Yes, of course, there's foreclosure built into every system already. Thank you for a fantastic webinar. Do these work on 5, 15-hour trading times? They work day in, day out on every pair and in every time frame. You have no problem whatsoever trading them. You can trade them on the tick charts. The tick charts is one of the purest ways to trade this stuff, and it's beautiful. Stock comes into a demand level and miraculously good news follows it. Yes, absolutely. Yeah. Lots of setups happen long before the news comes out, and they're there for a very good reason, so that the people who know what the news is going to be have already started bringing themselves from long to short or from short to long or whatever. They've started swapping around prices simply so that they could take the last few stop losses just as the news comes out and then shoot price off in the way that they want to go. Okay, isn't it when you, this thing's moving a bit, hold on. Isn't it when you see long Vic from the candle pattern? Oh, isn't it when you see a long wick from the candle pattern at the supply and demand zone, it usually signals the price action is about to reverse or weaken? No, absolutely not. That is another piece of propaganda which is pure rubbish, and you should get it out of your head immediately, because those candles are hell. I spent a little while learning about candle price action and whatnot, and it is not price action. They will tell you that once you've had a pin bar and the pin bar actually gets broken, then you get in. So if the pin bar is from a high to a low, then what are you doing? You're getting in extremely late. I love to trade pin bars, but I love to sell the top of a pin bar and to buy the bottom of a pin bar. I like to be in a trade before the pin bar happens. So yes, no, forget about pin bars, forget about all of your candles. They are rubbish, and they are set to almost work. They're there to work enough of the time to let some people with giant wallets actually profit from them somewhat. But for anybody who's trying to get started and make a living in the business, no, it cannot work. Forget about candles. Pretty much giving it all away here. Yes, I'm pretty much giving it all away here. And I do. I've been giving it all away for years, and I've been giving it away for free. And, you know, still only a small percentage of people actually get it. Either because they don't understand, or they want it to be more complex, or they want it to be less complex, or they're their own worst enemy and they will do silly things to hurt themselves. you know, there's so many demons inside all of us which can work to make us brilliant traders or work to make us terrible traders. Okay, please give the article name. You'll find it. Don't worry, you will find that. On your opening USD CAD example, cut through the rectangle twice. I'm not clear. Yeah, exactly. That one is a little bit more complex. And I did want to put it in there to show you a bit of a more complex one. The answers are there, though. You will find why these things work. Okay, there's another name that I know. Not sure if now is the right time to ask this question. Can you explain what's the FTR from IT's perspective? No, I haven't got time for that now, I'm afraid. But it's there in RTM anyway. Okay, love the webinar. What steps should one follow when analyzing charts before putting in a trade, i.e. multiple time frames, supply and demand? Exactly. That's one thing that I should have said, and I'm really glad that you asked. We really should know the entire picture of price before we take a trade. That's why even our website is called Read the Market. There's a full story of price, and it doesn't happen. Price isn't all on the last page or on the page you're watching now. There's an awful lot from the past that you have to look out for. There's high time frame levels which absolutely must be watched and must be brought forward into the future so that you know where they are, because you can get something which looks like price action, which is going to bring you on a low time frame from here to there, and you think absolutely price is definitely going to get to there, but then there's an old high or a low from the past which you ignored, which is going to stop price from getting there. So we have to have a multiple time frame, or at least the higher time frame understanding of where price is at. If we don't have the higher time frame understanding of where price is at, we can get ourselves hurt. Okay, just a big joke. I don't know where that came from. It will work in all markets. Yes, it will. It will be posted on public forum on RTM. Yeah, it will. It'll be posted on FF2. I don't like FF. I really don't. I don't know. We'll see. Isn't it when you see... Oh, hang on. We've got that one already. Which way am I going with these questions? Okay. I may miss some here because I don't know exactly which way I'm going through these questions. Is financial market very similar to the main street marketing that's selling their products to the herds? I tell you what. The financial market is very much like the entirety of our mainstream society, in that people's hopes and their fears are manipulated with lies to get them to do exactly what the people who move the market are doing. Because the people who move the market and own the market, they're the people who own our society anyway. And yes, they do manipulate their hopes and their fears in exactly the same way as they do in society. Simply like telling lies about Libya, Iraq, blah, 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 blah. Tell lies, make us all afraid of them so that they can go off and kill them. It's exactly the same thing that they're doing in the market. It's making us afraid, giving us hope, and then dashing it all away. So yes, is it like selling to the herds? No, but it is telling the herds what to do, making it look like you're there for the herds, and then absolutely stripping them of everything that they own. Okay, in your website you mentioned that they changed their way already. They did. They didn't make a big change, but they made a really fascinating and a really wonderful change. I'm not telling you that here now. What I've said, though, what I've given is still absolutely true, so there's no need to worry about that. Where do you take profits? Okay, that's a good question. I tend to take profits at the other end of a range. I tend to take profits where other people's stop losses are. So it is kind of simple. Although on some trades, if the swap is too high, you know, swap, it's paying stupid, ridiculous money for being in a trade. If the swap is too high, I'll very often get out early, because before price gets to its final target, it will often retrace an awful long way. And if you're paying swap through that retrace, it's just horrible to watch your money being taken away from you for absolutely nothing. So sometimes I do get out early. Yeah. Okay, so if a place where a trick was played but it was ignored, will it have the same importance on the other way back? I knew that'd be from you. Yes, it has exactly the same importance, if not more importance, on the way back. Yeah, oh, that's the same question twice. Yes, and it's worth asking it twice. In fact, I think you asked it 4 times there. But yes, absolutely. On the way back, it is very, very important. And now I have just lost where I was. Bear with me. Okay, is this strategy relevant to Forex commodities and indices? Pretty much all I trade are Forex commodities and indices. Yes, but you know, if there's anything else to be traded on a chart, it's going to work in the same way because the same people control it all. Right. Is there a strategy to trading news? Absolutely, there is a strategy to trading news. Don't do it until you know exactly how to do it. But the initial thing is let price push in the wrong direction to a strong level first. It might happen within 2 or 3 minutes of the news. It might happen within 10 seconds of the news. Let it push up one direction first to a really strong level, and then more often than not, it's going to reverse completely and you've gotten in at the tip of it. So I do love news trading, but I will never hear the news and then decide which way price is going to go, because often the news is such the price should go down, but price actually goes up because they've already made the news or made the move before the news happened. So you watch the news happen. Don't listen to which way it goes. It really doesn't matter what the result of the news is. Just watch the price action. Watch price going in the wrong direction first, let it get to a strong level, and then get in, and then watch it go in the right direction, and all those stop losses are yours for the taking. Okay. If a price in higher time frame is on the up and in lower time frames prices are moving low, so what do we follow and which time frame influences? I'm not sure I understand that completely, but I'll answer a question which I think it might be. We almost always must pay attention to the highest time frame possible. If that's telling us to trade in one direction, it's the best direction to trade. But of course, anywhere in the middle, I mean, you can have on the monthly, you can have this giant bar going up, and as price is coming down through it in the future, you could be playing up and down through all the ranges that are there. So yes, you can trade inside any direction you want. So yeah. Okay, okay, back we are to there. I need to watch this. I'm a bit confused. Oh golly, yeah. Watching this stuff, it all seems really simple to start, and then it gets really confusing, and then you look at it more, and then it's a bit more confusing, and then eventually you come back to it and you say, yeah, nice and simple, really, really simple stuff. Okay. I mean, how could a country be poor? Yeah, it's possible. It all depends on who you're in the thrall of. I'm practicing engulfing these days and totally in love with engulfs and FTR. Excellent, I'm glad. It is the proper way to trade. Real price action. I'm so sorry. Yeah, thank you for that answer there. Yeah, excellent. I don't see any other questions. Yeah, I think you're only going to see one question. I don't exactly know how this stuff works. I didn't get a single question answered. What a waste of time. Okay, fine. Yeah. Okay, sorry. Maybe you should have waited till the questions at the end. I asked that question because I too have my own way of entering trades in stop loss zone, but it's a manual monitoring method. Oh yeah, mine are manual as well, yeah. Not really technically coded one. I'm still trying to formulate a code to calculate the stop loss above the stop loss zone. Okay, fine, that's good, well done. Where can you watch a recorded webinar? You can watch it on this site here or watch it on RTM. It'll be in both places. Okay, I'm looking for a strategy that doesn't have stop loss. Can I find that? Can it be true and profitable strategy? Well, you're always going to have a hard stop loss somewhere. I mean, you really have to have a hard one somewhere. I'm the worst person in the world at having one, but if I am telling you what you should do, put one. Put a hard stop loss because price can shoot through. Something awful can happen. Something really way out of control can happen. Somebody can come and run amok in the market. You do need a stop loss. Absolutely, you need a stop loss. Okay. How can we draw the S or R zone? Big question. Yes, the answer is there in RTM. So yeah, go look in there and you'll find it. How to trade these setups on lifetime highs, and if the institution set out on a hunting spree, how do you tackle that? Well, we will look for the hunting spree. Absolutely look for the hunting spree. Where we're at all-time highs and lows, there's nothing can be done about those except wait for the price action to tell you that you've got a trade coming up. But you do need something on the left. So yes, if you've broken an all-time high, you're not exactly to know where it's going to stop. So there's no way of taking that trade. Let other people be the foolish ones there to jump in on this and to give their stop losses to the ITs. Then let price come back through and you will look to the left shoulder. Then you'll know where to take your trade. Don't be the first one in there at all-time highs and lows because you have no information. And if you have no information, you have no information, so there's nothing you can do. We're all about information. We're all about being able to read the market, not about guesswork. Okay, how to trade these? Okay, how to predict movement of all-time high? Okay, we've just done that. How to find, understand all orders have been consumed or yet to be consumed. If price hasn't spiked these rally-based drops or these drop-based rallies on the way away, then when price gets back there, they still exist and the orders are still there, so you can take those bounces. So, as I say, if they haven't been spiked, then they're still clean and you will get the bounce. Simple. How to draw a box as you mentioned? Well, you will simply go to the left shoulder and start the box at the top or bottom of the left shoulder and then bring it out to the high or the low and beyond it into the future and let it go. There are extenders out there which can bring it to the future so that you'll never lose these boxes. All my rectangles are always extended so that they're there in current time. How to find under, okay, got that one there. We've got some repeat questions. How probable is it to start with $100 and end up with $1 million? Only in our dreams? Well, okay. Golly, let me see. If you only have $100 in the world and you need $1 million, you'll drop out of the market. You'll lose your $100 on the first day because there's way too much stress involved in it. The best way to learn how to trade is to be able to afford to keep yourself going while you're learning how to trade. If you absolutely need it, then you're screwed. Don't even bother. If you absolutely need this to work, it won't work. The only way it can really work is if you don't need it. And that's a terrible thing to say, but it's kind of true. Because really needing it, it puts an awful lot of pressure on you. And okay, if you're the only person in your life, you have a chance. But let's say you and your family are having money troubles and you've got so much money left and you haven't got work or whatever, you'll try and learn this because you need it. The stress is way too great and your whole family and everybody who relies on you is going to be, well, are you there yet? Are you there yet? No, I'm nearly there. But you're still not there. And you will have eureka moments where you say, yes, I've got it. And you're still not there yet. So you're getting the hopes of your loved ones up that everything is working out as it should and everything is going to happen quickly. It doesn't happen quickly. For me, it took about 6 months to learn exactly how it all works, and then I kept learning for quite a while after that. But yeah, I lost my first accounts because I didn't bother trading in demo. I did it all in live accounts and then just blew my first one. You know, it's what you do. But compounding is amazing. If you know what you're doing and you start out with $100 and you're getting, let's say, 20 times return on each trade, I suppose with compounding, maybe it's going to take 10, 20, 30 trades or something like that to turn that $100 into $1 million. It's possible. It's all possible. Okay, how much time it needs to learn for a novice trader, the average practice time on the concepts. I should think it's about 1,000 hours. Now, if you know nothing about the market before you come to RTM, you'll do far better than if you think you know something, because there's an awful lot of propaganda to be unlearned before you can really start to understand this stuff. It is good to have an idea of how you used to trade and how you used to look at the market, because the institutional traders use what retailer traders think that they know against them. So yes, I'd give it about 1,000 hours anyway. So there's a lot in it. It really is not a get-rich-quick idea at all. So if you think you can take a few classes and be rich, you can forget about it, because you have to go through a few stages of learning. There's, what is it, unconscious incompetence, where you don't know that you don't know anything. And then there's conscious incompetence, where you know that you don't know anything. And then you'll start to learn stuff, and then you'll get into conscious competence, where you know stuff and you kind of know that you know it, but you have to think about it. And then you'll get to the stage, well, hopefully if you stayed at it long enough and you're lucky enough, you'll get to unconscious competence, where you just know it and you open a chart and you see everything on it and you don't need to think about it. So yes, it can take a long time. Everybody's different. So give it about 1,000 hours, and after that, then decide how you're doing. Yes, Pip, I'll let you out in a minute. Good dog. Okay. How many taps to a supply or a demand do you consider to trade a level? I don't consider supply and demand for trading. As I say, it might look like supply and demand that I work at. I will never trade supply and demand simply because they're there. I will always look for the trick on the left-hand side of that supply and demand. Always look for that trick. If there's no trick there, there's no trade. And if there's no trick coming into that level, there's still no trade. So be careful. Forget about supply and demand. Understand it a little bit, but there's far more to supply, or there's far more to reading in the market than supply and demand. Anybody who thinks they can live on that is they're just wrong. It doesn't work. Okay, how many confirmed trades with over 10 to 1 R could you find in the month? Oh, golly. You know, if you trade in the tick charts, you'll find 10 of them every hour, or 20 of them every hour. If you're looking at the M1, you're going to get, you know, this is only guesswork, really, as far as I know, loads. You can get absolutely loads of 10R trades. If you look at today's charts, you can find these levels, and you could find probably 10 of these 10 to 1R trades that already happened today. Okay, how long do you hold them? How long do you hold on to trades? I've answered that one. Bum, bum. I mean, some trades I will hold on to for months. Other ones, they've hit their target in 5 minutes, and that's enough for me. How long did it take you to be successful? It took about 6 months, as I say, to be successful, and then to be really, really successful and to be able to multiply my accounts. Then that only started after about 6 months. Could you share your initial learning journey? Absolutely. Everything I learned, I put down on the internet, so there's nothing left behind. Absolutely nothing is untold. And you can follow my journey from when I started back in 2010, I think it was. Everything that I learned, I wrote down and put on the internet. So there's nothing missing. Yes, and there are. If you see the way that I like to trade and the way I don't suffer drawdown and all that sort of thing, then there are valuable lessons to be learned from watching my history. Everybody isn't the same as me. I know that if I had the opportunity to come along with somebody like me who understands all this already, I wouldn't bother. I wouldn't give him a moment of my time, because I have to work all this stuff out for myself. I am that stupid. I really am that stupid. But if you like learning from other people, then I've got I understand how this stuff works, and you can follow my journey. It'll cost you nothing, just a bit of time, and you can learn exactly what I learned. Okay, how do you scan the markets for these opportunities? Simply, you open up the charts and draw in these levels and be ready for them. Set alerts for when price gets back to them, and then we watch the price action as it's approaching and as it has hit them. And if we get the right price action, we take our trades. So it's simply about drawing rectangles and putting alerts on them. How do you prevent price slippage when opening positions? You get a good broker and then there is no slippage. I never have slippage anymore. It's probably 4 years since I've had any slippage. Um, so yeah, I had forgotten slippage actually. But yeah, working with bucket shops in the early days, there was always loads of slippage and it was horrible, but those days are over. How do you position size your trade? Don't go in for any more than, when you're learning, don't go in for any more than 2% of your account on any one trade, because it's just too stressful otherwise. And if you're making 40 to 1 anyway, you know, you're still coming away perfectly okay with your results. How do you map the time frames? How do you recommend we organize them? Have all of your time frames together, but make sure that when you're looking at your monthly, you don't see your daily and your H4 levels, because that just obscures price. So if you are working on a particular time frame, have it visible in all of the lower time frames, but in none of the higher time frames. So that when you're looking at your monthly, all you see are your monthly levels. When you're looking at your weekly, you'll see your monthly and weekly. When you're looking at your daily, you'll see your monthly and weekly and daily, and so on and so forth. You need your higher time frame levels on your lower time frames. You don't need your lower time frame levels on your higher time frames. How do you manage your trade after an entry? Once price gets to the first target, I will take out enough to cover should the should price reverse from that first target and come and take the stop loss out. Always make sure that you're set to break even. And setting a trade to break even does not mean putting your stop loss where your entry was. That's rubbish, because price does come back for a break even hunt, and it comes back regularly for a break even hunt. Setting your trade to break even means taking enough profit at your first target so that if your original stop loss hits, you don't lose. Okay, now, I've lost the run of all these questions again. I'm coming. Do you have losing trades? Okay, let's start there. Yes, I have losing trades, absolutely, but overall, I don't have losing trades. This comes back to taking enough profit at the first target to make sure that if your stop loss gets hit, that you're going to still win. So yes, I do have losing trades, but let's say I sell the Aussie dollar, I will make one profit from it, and if it doesn't go off to the next target, then I also make one loss from it, and I end up in profit through the two of them, because you always must make sure and take some profits. Okay, do I trade options? No, I don't trade options. No. Do you trade with 1 minute charts for stocks or currencies? Do you trade with 1 minute charts for stock? Okay. Yes, but you can. I used to do it all the time, as I said, and I loved it, but you will burn out doing this all the time. Well, I burnt out doing it all the time anyway, and stopped wanting to do it, and of course I fell totally out of love with the markets. Really, I wanted to know how they work. I wanted to solve the puzzle, but as for doing it for a job, I absolutely hate it. I could not be arsed sitting in front of a trade or in front of a chart watching price move all day. It fascinated me until I understood it, and I didn't leave it until I understood it. My golly, the hours I put in watching the charts. But now it doesn't hold much mystery at all, if any, so it kind of bores me. So it's on to the next challenge. Do you trade with 1 minute charts for stocks, currencies? Yes, I do when I can. Yes. Do you trade options? No, but yeah, the options is a different thing. Do you prefer high time frame or small time frame for trading? You know, if I've had a cup of coffee and I know that there's nothing happening and I'm idle for the next hour or something, I'll get in to the 1 minute charts, and yeah, I'll take those bounces. But really, with me not being a full-time trader, being more on holiday for life, it's higher time frame stuff that I would do. But it's all down to personal taste. It really doesn't matter. I mean, you guys have seen me, or a lot of you guys have seen me just at it all day, taking every single bounce in the market and profiting from it, and that's great. But I couldn't do that forever. You can, but yeah, I don't want to. Do you mean we should sell at resistance and buy at support? Sell at resistance. So resistance is the... not necessarily sell at resistance and buy at support. No. Let resistance and support prove themselves to work. And then as soon as they stop working, then you can get yourself in once it's at the right level. Let the trick be played. Let resistance break. Let support break. And then if you get into one of those left shoulder levels, like I discussed in this webinar, then you can take the trade and go right back through that flag again. Do you look at Renko, Heiken Ashi charts? Are they simpler? No, I don't. But I've seen them. I've seen the Renko charts and they look great, but there's no need for them whatsoever. Simple, normal, open, high, low, close charts. They work best for me. They're simple, and I like my blue and my red markings on them, and they're pretty. So that's what I use. Do you have losing trades? Yes. Do you? Oh, and wherever you go, you're going to bring yourself with you as well. I mean, if I'm on a self-destructive day, I am going to lose trades. I mean, I can look back on my trade history. Well, if I kept records of these things, I could look back on my trade history and see the worst days of my life. When this happened or when that happened, I just switch off utterly and I do something self-destructive and I make a big dent in my account simply because I should never have traded on the worst day of my life. Yeah, we get days like that. So yes, I lose. Do you also use trend line and channels in your trades? No, absolutely not. Everything is rectangular. Everything is horizontal. Don't bother with trend lines. Don't bother with channels. They're totally unnecessary. Do you have a bullish scenario as well? Well, so you've noticed that. Yes, I am. I'm really a seller. I sell, I go with gravity rather than go against gravity, but it's exactly the same. I mean, yes, I do mostly sell in everything that I do, but if I sell the USD CAD, all you have to do to get me to buy the USD CAD is to turn it into CAD USD, and then I'll sell that. It really doesn't matter. Selling or buying, it's exactly the same. It just matters the order in which the instruments are there. Do I follow Heiken-Ashi? No, I don't. Do you do this from the monthly down? Absolutely, we do this from the monthly down. Damn straight. If you don't have your high time frames marked, don't trade. Do you also use, okay, got that. Do we just need to understand the past price and current candlestick? No, we don't do candlesticks. No, forget about candlesticks. They're rubbish. Do I need to ask questions here? You know, if you want me to read your questions, then yeah. Didn't you sell this stuff previously? Why are you now giving it all away for free? I've been giving it away for free for years now. I've been giving it away for free before I've been selling it. But you know, the paid courses are there for anybody who wants that little bit more. You don't need them, but they're there. So many questions and I'm losing them. Could you please provide some cautions for the live market charts? At least 2 charts, Euro USD and USD CAD. Could you some cautions for the live market charts? At least on 2 charts USD. Okay, right. I don't understand. Let's open up the Euro. Okay. Let me put this away a moment. I hope I can get it later. The euro. Okay. Alrighty. And templates. No. And let's just clear this off. Okay. Oh, I suppose if you saw that, you could see exactly where I'm looking at for trading in the future. Hey, Now, what are we looking at here? H4, what have we got? Daily, okay, well, that's weekly, it's an obvious range that we are in. Okay, if we want to sell or buy this stuff, what are we looking at? Okay, let's have a look across here. We got that guy over there. Okay. All right, so that's a nice place to fake down to anyway. Really nice. So yes, I'd look around that area. For that, I would be looking at buys anywhere in this zone here. For that, we can tie it up and make it clean. So around here is a good place. See this left shoulder over there? It's already been hit inside there, so that weakens it. Remember what I said about price being or hitting the left shoulders on its way away? So this is now kind of weak inside there. So I'd look somewhere that little bit higher inside there, or I would go even lower than that and try and find a left shoulder inside there somewhere and work with that. Another better place for me, I suppose, is to let this break altogether, and I would come and let price. This is a different lesson altogether, however. I would let price come in there, and there's another reason for that one. Now, here's another one, of course, and maybe we have already bounced price because of this one. Yeah, we're in the area. Certainly we're in the area. And we have this thing called symmetry in the market. If we do get a nice bounce from here, I'd like this area to be filled up again. That's just symmetry. So I would like for price to come back into around this area over here, simply to fill up this range. Lovely and simple. So that's it. That's a big view on Euro USD. But I'm sure that what you will probably do is watch this video and rewind it a little bit and see exactly what I had lined up on Euro USD there. So USD CAD, boo, boo, boo. And this is the same kind of thing again. Yep, this is, yes, what have we got here? All right, left shoulder over there. Has that already been picked up by this guy? Okay, that left shoulder over there has already been picked up by this guy, so it's not so strong anymore. First time back is always best for these things. And then this is inside that compressed zone inside there, so I wouldn't be looking for anything until we get up to around this area over here. We've got a little left shoulder in there, and this faked up past it. This didn't come up to touch it. This didn't come up to touch it. So it looks like we've got a resistance set over there, and then resistance over here. Let those resistance break up into there, and then we have a short trade from there. Yeah, nice and easy. This left shoulder over here, that already got picked up by this guy over here, so that is gone. So now we're looking deeper. There's a left shoulder over there. That's a nice place where I would be looking. Yeah, there's the absolute MPL on this place. So what you'd expect is for support to be set up here, maybe another support here, maybe a bottom there and another bottom there, making for a double bottom to let people buy it the next time it comes down, then take their stop losses down into this MPL and go from there. Now, if this has already given us price action to the downside and it's told us the price is going to go down to a different level, maybe that it's going to come down to here, then we have a different scenario and we don't look for buys down here because we've had price action telling us the price is going to go down. I'm not saying we have. I don't have the full picture of price over here. There's an awful lot of stuff going on here, but I don't see the big picture, and I'm not zooming out to the big picture to see what it is. But if we do have price action there, then we'll be looking at price to fill up this range again and then simply cut straight down into its target beyond. So that's that. Now this isn't my chart. Yes, this isn't my chart. It's a nice chart, but it's got a lot on it. It's got absolutely loads on it, but everything's important, I'm sure. We share templates in the academy, and we all are on the same page as each other with everything that we do. So this is somebody else's charts, but yeah, it's a good chart. Now, okay, let me just get back to answering those last few questions that we have. There are absolutely tons of questions. I don't know if you can see them all, but there are so many, I don't know if I can answer them all. Okay. Could you add to that? I don't know, what could I add to that? I don't understand what that means. Could this way of reading charts also work with binary options? I don't know. You'll have to leave me alone about binary options because I've never looked at them. So yes, I don't know. But if it's on a chart, then why not? Could these valuable rules be automated? I mean, making them into a system. I tried. I did try. And there's just so much to it. There really is so much to it that you need something to be able to think for itself. So yes, if you had a computer, or what's it called, a set of algorithms that can think for themselves, then yes, you can. But if you're to do it all out of your own mind, there's too many variables in it. Can I zoom it, please? Mark this instrument. Okay. Can you tell me the name of some websites in order to get knowledge of reading charts? I can tell you the name of one website to get the information for reading charts. It's called readthemarket.com. It's the only one out there that tells the truth. Okay, can you tell us where to get it? Yes, readthemarket.com. Can you share one of your chart Which trade one personally? Well, here's one from the Academy. It's kind of like that. I like my charts a lot cleaner than this, mind. That really is a bit dirty. But yeah, that's the kind of thing that we have. Okay. Okay, that's the same question being asked many times. Can you please do one seminar of news trading? Is there enough to do a seminar on news trading? I'd have to say that if you're going to be a news trader, you really should understand absolutely everything that there is about the market before you even think about doing it. So if you're ever going to trade the news, it means that you are already somebody who understands the market fully and do not need any lessons in news trading. So stay away from trading during the news until you understand it completely and you don't need a lesson in it. Can we work by limit order, or we should watch the chart for confirmation? If we get confirmed entries, which I'll be going into next week, then we can absolutely put limit orders there till the cows come home and know exactly where price is going to go to. So yes, we can put a limit order there so long as we have take profit on it as well as just an entry and stop loss. Can we trade the small retrace to the swap flag limit instead of waiting for the bigger retrace later to the fake out flag limit, the Quasimodo flag limit level? Yes, we can. And you know that we can. We can take those quick, simple little trades once we manage our expectations on them. Can we make intraday trading as a career? Absolutely we can. Really, we can. Not everybody can do it. Not everybody's cut out to be a trader. Some people are just gamblers and they only want to gamble. Some people want to hurt themselves as much as they possibly can, so they should never be traders. If you can actually keep your head and do things that are good for you, then you can be a trader and you can make a great living at it. If you're somebody who's self-destructive, forget about it. Just take to alcohol or drugs instead, Can I please have a copy of this webinar? Of course you can. Can I ask a question after yes? Oh, I see the chronology of these questions is all over the place. I see. By trading stop losses, don't you tend to miss lots of opportunities as many times price tend to bounce from the zone and doesn't move up to the stop loss area? Very often you're going to have stop losses within that zone anyway, so you can trade those. So yes, you don't have to miss many opportunities, but you also don't have to take many opportunities. Just look at compounding and look at getting, let's say, 20% of your account, 40%, 80% of your account from one trade. You don't have to take every single opportunity that there is. Thank you for all your info. Yay, you're very welcome. More binary options. Probably bad because the risk reward won't cover the commission loss. I don't know. Don't ask me about binary options. I haven't seen them. Are your sites enough to trade in market? Yes, of course. Are we able to make out gap up or down with this method? I don't understand, but we can trade stocks with this method because the stock market works in exactly the same way. I do hate the gaps during the night, but that just happens. Are there good FTRs and not so good? Oh, absolutely. There are good ones and bad ones. There are ones that will give you massive returns and ones which will only give you tiny returns. So yes, there's a lot to be learned about picking the best ones. This is where your multiple time frame analysis comes in, and that will help you definitely find the really good ones. Are my questions going through? I believe that they are, because yes. Oh, you wanted me to answer your questions as soon as you answered them, or as soon as you asked them. I see. Right, FX man. Okay, you're very important. Any specific reason why you're not trading in options? Okay, give me an options chart and I'll see if I can trade it. There's no particular reason. I simply have my MT4 charts and I'm a very lazy person. I simply have a broker's charts and I trade whatever's on those charts. So let me see. What do I trade? This is a list of what I would trade. Just those guys. That's what I pretty much trade. And yes, this is my charting broker, not my trading broker. So my trading broker has pretty much the same stuff. That's the list of what I trade. Okay, and what is the best time to enter a trade based on GMT throughout your long experience? The best time is when price is at the right place. It's either, now it very often happens just as London opens, just as Frankfurt opens, just as Tokyo, just as New York. Very often the setups are there. And of course, coming up to the news, it's a great time for setting up trades as well. So yes, at market open, great. At news time, great. Best times for me. Also, you mentioned some other elements were necessary, albeit already a good start. Yes, there are other bits necessary to know all this. I mean, if this is all you need to know to profit from the market, then everybody would be doing it. Okay, if with your experience, what can you say about success rates of these levels working out? Is it around 90%-ish, or should we adjust expectations? It really sounds like you're able to predict almost every move. You can predict almost every move, and yes, they do work 90-ish% of the time. But as you've seen, you have to manage your expectations. It can just be a tiny bounce that you're going to get from these things. And sometimes price will pass right through them. Sometimes it just does pass right through them, which is why we never go all in on every trade. We just have to stick with tight money management. And I've been at this for a long time now, and I can profit from nearly every trade, but I'm still never going to risk more than 2 or 5%. Okay, now have I run out of, okay, there's some question marks there without any questions on them, so I don't know what they're all about. Okay, I think, now maybe there are loads more questions being asked that I don't see here. Yeah, maybe I've answered them all. I'm not exactly sure. Oh, there's a way of ticking off what I've answered, I suppose. I should have done that. Okay, I can't see any more questions, so I'm going to wrap it up for now. Yes, the question thing keeps moving, but I can't see any new questions. I suppose I'll probably see soon enough that I've missed absolutely loads of questions. So there, So okay, I'm going to wrap it up, leave it at that, and I'm going to thank you very much for your time, and yeah, thank you very much for coming along. There's a long way to go to being a really brilliant trader, but there is a way to be a really brilliant trader. Simply dump every indicator you own, never think of them again because they're absolutely rubbish. Apply what you've learned to the charts and try and read the market. Yeah, it's really as simple as that. So thank you all so very much for coming along. Have yourself a great time in the market and be really careful there. Those guys are really out to get your money. So don't let them have it. Thanks all so much for coming along. Don't know how to switch this meeting off, so I'll let somebody else do that. Take care of you guys. Signing out. Bye-bye.